The opportunities to invest in dividend businesses around the world is really quite compelling, and I think this is an area of the market that investors should start to consider very seriously.
The M&G Global Dividend Fund is a fund that looks for companies that can grow their dividends on a sustainable basis.
The fund is essentially there to try and provide a growing income stream for life for investors. So really about investing in businesses that are capable of paying dividends that consistently grow over time.
Dividend investing gives us a natural tailwind to outperform the stock market, and that's proven by historical data, and we believe that following a proven strategy, that gives us a head start in terms of providing good returns for our investors.
Some companies get to the end of the year and then pay a dividend out of the cash flow that's left. But the really good companies have that dividend decision at the beginning of the year, and it's part of their budgeting process. Dividend actually helps them grow as a business. When they have a capital decision at the beginning of the year, that dividend is constraining that capital, which means that the money left over to grow the business is more likely to succeed. It's more likely to go on the projects with the highest return. The ability to invest globally is incredibly important. When you open up to different parts of the world, the flexibility of choice you have means that you have methods of coping with different market environments. When you invest in global dividend companies, companies that are capable of increasing their dividend throughout a cycle, you're getting access to two strong benefits. One is the actual capital discipline of the company that is capable of growing throughout a cycle. So it has a strong enough position in its market or its industry or a specific geography where it can continue to make good cash flow and good profits and therefore pay you that dividend and pay you a bigger dividend over the years. When we launched the fund back in July 2008, the year that then followed from there was the worst dividend market since the Second World War.
Many financials were trading on very high dividend yields, but the market was quite right to be sceptical about them because those dividends never materialised.
It showed to our investors that we are capable of doing what I'd say, and that is providing a growing income stream.
Many traditional income fund managers have started their investment process by screening for the highest yields. We believe that this is a potentially dangerous exercise because for us, a high yield isn't an automatic signal of value. It merely says that the market is sceptical about that dividend stream being maintained.
So the first thing we ask ourselves is, does this company allocate capital effectively? Secondly, we look at that dividend track record. Has it grown the dividend over a sustained period? And then we ask ourselves, do we think they can grow that dividend going forwards?
And if we can understand why the company can get bigger, then we can understand why the dividend can get bigger over time. So that dividend you get will obviously grow in value significantly, but also the share price of the company does well because you get a sensibly growing, disciplined company.
I think this fund suits people who are looking to save for the long term and allow these dividends to accumulate and compound over time, delivering hopefully what will be a significantly larger investment by the end of their investment horizon.
We haven't reinvented the wheel with this fund. We're really just about discipline, and that's sticking to what we believe works over the long run. There will be challenges ahead, so it's about being ready and making sure that we are investing in businesses that can cope with those challenges.